eventually people sense there's an innate. I mean, everybody should have been able to feel this for the past couple of years, or if they haven't felt it for a couple of years, they're at least feeling it right now. That there's something wrong out there, and it's embedded inside of us. It's like this thing in our DNA, and eventually people rush back toward gold and silver. And it's always happened. I just believe that it always will. And it's this simple. This is God's money. You can't reproduce this at will. It's something that it's an element that we can't make. And because governments do this silent, this stealth tax that we can't see, called inflation. Politicians get elected by promising a whole bunch of free crap. And turns out that crap ain't exactly free.
Right.
They have to, when they deliver on these promises, a lot of it is through deficit spending, and a lot of that deficit spending is made up through currency creation. And every time a brand new unit of currency is created, it goes into the currency pool, and then prices have to rise just like a sponge to soak up that excess currency. And there comes a point where prices are rising too rapidly, and Joe Sixpack eventually sees that he's getting fewer and fewer bags of groceries for his $100. And the masses come rushing back, and that's when gold and silver finally blow off top of this big old peak. There's a massive wealth transfer. And for people that are investors, that are looking for opportunities, when they get into any bull market early and just ride it and wait for that wave and for it to go into this overvaluation and then sell. That day, we'll know when we're getting close to that day when gold and silver is in the news day after day, when it's the first words out of the newscaster's mouth. Just like in 1980, first words out of Walter Cronkite's mouth. Gold hit a brand new record high of blah, blah, blah. It was front page news on the newspaper for day after day, weeks on end, on the cover of Time and Newsweek the same month.
And that's the time to get in, right?
That's the time to get out. That's the time when you want to sell. And there's going to be plenty of people that want to get in. There's going to be a lot of people to sell to. We'll be fighting.
Absolutely. I know.
So, it's been a tremendously undervalued asset. We're at this seminar, and one of the things I asked in front of the crowd is, silver was $50 back in 1980. Gold is $8.50, and that was on Saturday. Friday, gold had come back up to $800, and silver was still below $10. And so I said, gold is down $50 from its 1980 high. 28 years later, it's down $50. Silver is down 80%. I said, name another asset, name something that is down 80% over the last 28 years. Nobody could. Then one guy says computer chips, and we are the state of the technology of manufacturing computer chips has caused them to fall tremendously since 1980. The only other thing was the U.S. dollar. Yes, it's fallen about 80% since 1980. Otherwise, there aren't any assets that have gone down except for gold and silver. The price of silver was $50 in 1980. It's $10 today. There are 7.5 times more dollars in existence. That means for silver to have the same valuation against the dollar as it had in 1980, and history will repeat. It will, when you're measuring things against things, the values they don't go up. They just sort of go overvalued, undervalued, overvalued, undervalued. So this day will repeat. For silver to have that same valuation as it had when it was $50 in 1980 today, it has to be $375 an ounce. And I don't know when this will be viewed, but these figures are actually before they started, just 6 weeks before today when we're shooting this. In the last 6 weeks, the number of paper dollars in existence, it took 200 years to go from the beginning of this country to about 820 billion paper dollars in existence. This is called M0 currency supply. Over the past 6 weeks, it's been increased from 820 to 1.2 trillion, a 50% increase in just 6 weeks. Over the weekend, I said there is some major disaster looming right out in the future. There's some big news coming. Then this is Monday morning. We've got the meltdown of Citibank, and on Bloomberg, it's saying that Maloney pledges $7.7 trillion to that, and $7 trillion is 50% of the GDP of the United States. It is 50% of the M3 currency, the broadest measure of the currency supply of the United States. That equals 50% inflation coming down the road at us very quickly here someday in the future. And they don't really know whether, they're doing extraordinary measures. And I read pieces out of a speech from Ben Bernanke at this convention, and one of the things it said in there is that when they implement, then this is from 1992, anybody could have read this, and they could have seen the future. It said that they may have to take some extraordinary measures, but they don't know what the economic consequences will be, because they haven't done it before. Well, it's saying that they don't know whether they're going to cause a hyperinflation or not. They're taking a gun as a revolver, putting a bullet in it, spinning the chamber, and doing this, and seeing if it goes off or not. So, anything else you wanted to talk about?
This is what we're talking about. Real money, folks. That's real money. So you want to take this, as much as you've got, take this and turn it into this. You'll be far better off.
Yeah. I think that's going to give you.
Don't take my word for it.
It's going to give you better.
Do your own. Okay. Yes. One
this
thing.
This is gold, and I actually think silver is better than gold. But gold is pretty darn good too. I like them both.
It should be obvious what the action step is. I mean, we just kind of said that. But maybe if you could just a couple of minutes on doing your own due diligence on this. I mean, you're an expert. You've been studying this for years and years, decades. You've written a book about it.
Yeah, and in the back of my book, I give you probably every free website I know of that you can do due diligence on it, and a whole bunch of subscription newsletters. Also resources on how to be a watchdog, the places you can, the Federal Reserve websites, all the other government websites where you can see what the government is doing. You can go to the GAO.gov. You can download, everybody is able to do this, download the financial statement of the United States and take a look at it. And what's really interesting is they've got the budget deficits in there for each year. And I've been downloading this and printing it out and keeping a copy on my desk for years now. And the silly thing is, they've got this like fictitious smoke and mirrors voodoo budget deficit where they tell you it's $380 billion or something like that. And then you take the amount that we owe this year and the amount that we owed last year, and we're like $750 billion deeper in debt, yet they're telling us that the deficit was only 380. Well, I mean, you don't have to be highly educated to know that the real deficit, well, if you ended up owing twice as much as this fictitious deficit, the real deficit is the difference between what you owed last year and what you owed this year. It's that simple. And so